Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Retail is hot and you are not. Doesn't matter what is reporting. They're all popping, and we got some earnings from here at Sports. We want to talk about the reversal in L brands and every retail stock. We'll try to cover as many of those as we can. We have an upgrade from PayPal we'll want to discuss as well, and Russia considering increasing the supply of oil, and that's what's bringing us down. That's what we think. That's what we are going to attribute this morning's weakness to. Two guests on the docket for this morning. First up at 8:15, we're going to be joined by Greg Firman. He is the founder of E-Trade FX. And then at 8:35, Frank Holmes will join the show. He is the CEO and CIO of U.S. Global Investors. Joel, how's it going this morning?
We are in the red, as you mentioned earlier. We got up to 37.75, and that was knocking on the door of this week's high and last week's high. But oil is dragging us down, just trading off the pre-market low of 22.75, currently at 24.25. Keeping an eye on your close at 27.50. That will be your level of control here early in today's session. As mentioned, crude oil futures taking a tumble back under $70, down $1.60 at 69.10. This is going to be our fourth down day in a row after hitting 72.90. Current low 68.96. And folks, I don't have a lot of support in the 68 handle until 68.20, but I've already had a big range in crude, so that could be a longer term target. Gold in the red by 80 cents, 1303.60. Silver down 3 pennies at 16.66. Bitcoin down $82.50, trading at 74.75, and approaching the lows of the move in the futures here at, well, that's way down at 65.27. Dennis, how you doing? We have a 3-day weekend, but you will be working hard on Monday.
Yeah, I'm not allowed to have any weekends at all because I have to work on the Canadian holidays and the U.S. holidays. It's the way this world works. No holidays for me, Joel.
All right.
I don't work nearly as hard on the U.S. holidays, though, seeing as how I trade U.S. markets and not Canadian markets. But I'll be watching that Canadian markets there and see what's going on. But it's usually crickets when the U.S. markets are closed.
All right, so let's start with the earnings.
Let's start with oil. Let's start with oil.
You want to start with oil?
Yeah, because this oil here, yeah. I look at the USO this morning. We're down over 2%. We're getting rocked here this morning. And oil, and I have a lot of energy stocks in my invest portfolio, but this looks a little bit broken here now. I mean, the uptrend is at least broken. I mean, we're still at an overall, upper trend, but I mean, this immediate trend here is definitely broken now. What is the catalyst here, Spencer, this morning? Just to recap what's happened overnight.
Saudi Arabia and Russia said they're both willing to increase the supply, and just can't catch a break.
And that is driving us down significantly this morning. And energy stocks really getting hit hard. XLE down 1.4%. XOP down 1.78%. OIH, another one. Oil services down 2.2%. Pick your poison here this morning. ExxonMobil trading down 1%. Chevron down 1.5%. Somebody really got excited in Canadian Natural Resources. That was an oops trade there. It's trading down 7.5%. Don't worry, it's not going to open down 7.5%. It was just somebody swept down, and it looks like all the way down to $30.59, which is down $5. So that was a complete oops trade. It's already bid at 34.65, so that stock's probably only going to go down the 2 to 3% that the other ones are going down. But somebody hit the trigger and hit it too low.
From a fundamental standpoint, crude seems like it's like really easy to trade, right? When OPEC comes out, says we're cutting production, it rallies. And then, the logical thing that when it gets over, has these big rallies, they're just cranking the pups, especially like a debt-ridden country like Russia. I mean, it's $70 a barrel. They're like, pigs in slop. I mean, it's logical. You just don't know when they're going to come out with these revelations. And, Russia, coming out today and making that. That's just one thing where you got to be watching the news and be ready to pull the trigger.
Yeah. Headline-driven market.
That is so headline driven, and it just gets going one way or another. Now, the reason it's dragging down the S&Ps, Dennis, and we've been following the top 10 components in the S&P 500 for a long time, and ExxonMobil used to be up there at number 2, actually number 1 for a while, ahead of Apple. That has slid. It's still in the top 10. It's fallen to number 8. And Chevron has dropped out of the top 10, but is still one of the top 12 components in the index. So, it's oil and it's tech. And then you got a few financials in there with Berkshire Hathaway, JP Morgan, and Bank of America. So here you go. One of the big factors in the index weighing on it today.
Yeah, and that's why the S&Ps did roll red. We were up for a long time, and oil really started rolling over there, and the futures followed. So good point there, Joel. We've also got a number of earnings reports from last night. We've got a few from this morning as well. I want to go to Foot Locker first because this stock is blasting off into orbit. And all that matters, I don't even know the numbers, but I was already thinking I should just be long Foot Locker in this report because it's like sentiment. Sentiment matters so much more than the actual numbers. If they start liking the sector, they're looking for pullbacks. I mean, L Brands was the best example of this. You got LB, terrible report, gets hit hard on the report, turns around, goes green yesterday. Just telling you, seller exhaustion is what that is. Everybody's been selling this thing for 3 months straight. They are tired of selling it here now. Now you get the shorts getting squeezed a little bit. You got to say, hey, it won't go down on a report like that. Maybe it's done going down for a while. I actually like L Brands here now. I would stop out probably at yesterday's low. So if I was setting up a swing trade and buying it here this morning, let's say at $35.10 or $35, I think I'd stop out below 32.71, and then maybe give yourself the upside that you can squeeze them a bit and maybe move it up to the 40, because some of these retailers, some of the beaten down ones have actually turned, and some of the ones have actually done really well here. I mean, you look at some like the Kohl's, and it got hit a couple days ago, bounces all the way back immediately. Just telling you, there's underneath demand now here in a lot of the retailers, and Foot Locker kind of fit the bill yesterday, but now blasting off. I'm not chasing it here, but I'm also not shorting it because I saw what happened with stocks like Tiffany's, and it's scary. It's up 15%, but we thought, if Tiffany's was overdone when it's up 15%, it goes up 20. So yeah, so it's scary here. Foot Locker, let's talk the numbers, Spencer. We'll jump into the technicals.
Well, the comps were down 2.8%, but they made some money last quarter, more than expectations. Q1 EPS $1.45 versus $1.25 estimate. Sales $2.025 versus $1.96 billion. So the beat on both the top and the bottom line for Foot Locker, even though the comps were down, and it's a good report.
The comps down never sounds great, but again, we're just in a situation where everybody was, just done with it, and it started coming back. Obviously, we bottomed out way below that, but even in March, if you just look recently, $38, climbed up, sold off recently in May. We went on a little run here, and the run is continuing big time here this morning. Joel, give us some technical levels.
Well, first, I just want to say I'm happy about the L Brands. That is in, I believe it's one of Lisa's long-term portfolios. So nice. I'm up, and I'm glad on that one. Just holding on.
Where'd you buy that? You're up in that. That thing was just hitting new all-time lows like a week ago.
Well, do you see that?
Are you up in it?
Yeah, but you see that consolidate. I kind of did the same thing that I did in Kraft Heinz.
Yeah.
You see all that consolidation?
Yeah, you bought the consolidation, then it tanked, and now it's come all the way back.
Yeah.
Well, I hope Kraft Heinz can do the same thing.
Yeah. But let's take a look at Foot Locker. I'm almost hesitant to make a call on this one because I have so much egg on my face from the Tiffany report. But
should have taken you on a bet on that. I kind of thought I might keep going, but I couldn't do it.
Yeah,
it was just up too much.
Yeah, I mean, well, just maybe use the same trick that would have worked in Tiffany, and that's if it takes out the pre-market high, then just buy the daylights out of it, and maybe we'll see what happens ahead of that open. I'll tell you right now, your pre-market high was just made on the last bracket at 53.75. Spencer, pull up the monthly, and you tell me what's in here between where we're at, getting over 52 and 59.70, which was your June 2017 high. I know it's not going to 59.70, but I mean, look at those red candles. I mean, what is in there, Dan? I mean, we came straight down off that high. So hard to find resistance. I'm sure you can find some daily levels in there as well, but keeping an eye on the pre-market high.
From last night, we had a number of reports with Splunk, Deckers. I want to go to the Gap GPS. This is one that is not bouncing back, at least not this morning yet. Stock, I still don't totally get, I know they got the Old Navy, but I still think the Gap, it's not one that I want to own. It's come a long ways back from the lows that it was setting back. If we go into early 2017 or lower 22s, we've come a long ways back. We're actually all-time highs, I believe, are at $46. They're still ways from that, but I don't know. 3.23% dividend, yes, that's nice and everything, but I think there's better retailers out there, so I'm just not in love with it. Even though, and it's obviously down this morning here. Maybe we bounce back just because, a lot of retailers, there is underneath demand here. I do think you get in the 29 handle. I think you got a lot of underneath demand as well. I just don't like the fundamentals of this one as much as some of the other ones.
Your pre-market low, 29.21, and then you just got a big bounce off that. The high of the rebound has been capped at 30.60. So those are your early levels, 29.21 to 30.60. Just kind of backing and filling here after that, getting whacked on the initial number. Looking at it, the dailies here, I see a low in the 29 handle at 29.19. So I would try and hold out for that level. The longer it takes to get to that level and not take out the pre-market low, you may have to buy this into a rallying market.
Just a question from the chat, and we'll just digress here for a second.
We always do.
Bull for trade talking about selling May and go away. You know what? I'm torn on this, and there was some stats that obviously said that if you were to sell, you're and the overall thing, and this is probably something that if we had Jeffrey Hirsch on, he could probably talk a little bit more about this because he really follows seasonality patterns there. But I think this is more of a myth. I don't know if I thought I saw a stack over the last 25 years that there hasn't really been anything like that with the sell in May and go away working. So basically the whole thing is that they say, you go in the summer doldrums. So you book your profits in April, get to cash because May, June, July, August always, stink basically, September. And then you come back in the market in, what is it, October? Are you supposed to come back in and rebuy?
Yeah, after the summer.
Do you follow that at all? It's the sell May?
You know what?
In your trading? I don't use it at all in my trading.
Dennis, let's see. Lisa and I will be married 29 years on Monday. We've probably been investing for over 30 years, and never once have I ever considered making any adjustments to my long-term portfolio based on that. I mean, it's just, I mean, what am I going to, individual issues, different things. I mean, we have very low transactions costs, but still you got to realize getting in and getting out is your transactions cost. And
it's hard to time long-term too. I mean, the market is very hard to time long-term. I'm very good, with short-term trading. And obviously I've made my living day trading, and I feel like I'm a very good day trader. As a long-term investor, I don't try to beat the market. It's something like the stat is like 80% of long-term money managers. So do not beat the S&P 500.
Yep.
So I just kind of buy stocks in my investment portfolio if I like the fundamentals of them, and I just hold them for the most part. That time horizon, like I said, there's some stocks I've had in there for 15, 20 years. There's some stocks I've had in there, and it's all time. I basically got 3 different time horizons I'm trading. Jeremy was talking about this yesterday too. I day trade. That's my bread and butter. It's how I'm making my living. That's I'm in and out of. I'm trading, analyst moves. I'm trading technicals. I'm trading imbalances. I'm trading order flow characteristics. I'm trading a number of things. Now, and then I got my swing trading account where I like a setup on the charts. I like that BILI thing. That
give an update on that, Dennis.
I held it, and I was thinking about selling it. It looked like it was a sell at 15. And somebody in the chat said they sold 15. I was like, I should sell it there too. But then I get sidetracked doing stuff. I got 2 kids running around, and during, so I didn't, and it tanked, and it came back up, and I probably should have, sold it there. But in any regard here, it had a nice candle on earnings. It was too fast. So now the question is, do you ride it out and keep following? I'm still up in the trade, but I don't want to let a winner become a loser on this either. And this wasn't like this wasn't one I'm going to throw my investment portfolio and forget about it. It was more in the swing portfolio where, okay, I like the setup. I think it could go. It went. Now I got a nice gain in a hurry, and I probably should have booked it because it was so fast. So that's different time horizon. And then, there's other longer term investments that, I buy stocks, I'm holding them forever. Like the MasterCard is my best one. I bought that thing. I'm averaged in from, I think, $13 on MasterCard. It's 191. I'm up over 1,000% that. Probably holding that till I die. I like the fundamentals still, unless, the fundamentals change. The only time I really am moving around stocks in my long-term investment portfolio is if the fundamentals of the company I feel have changed and I'm not liking it anymore. So, that's, how I trade. So, long term, I'm trying to go long term like these. I'm going to retire on these stocks. This is basically my, I'm being my own investment manager, trying to pick my own company. I buy a lot of ETFs too. I mean, I'm always, as markets pull back, I'll buy some ETFs as well. I got a lot of energy ETFs. I've got, SPY in there. I've got the Qs in there. I've got a lot of ETFs as well, but it's fun to do the individual stocks. I have a lot of individual stocks too. I would say half of my net worth in my long-term investment portfolio is probably index funds, ETFs.
Yeah.
And the other probably half is like fun stock picking, and sometimes those work out, sometimes those don't. But overall, my ETFs probably still drive price. And it's amazing when I have, like I said, like 95 or 100 stocks in my investment portfolio.
I don't know how you do it.
Amazing as to how consistent it moves with the S&P. S&P is down 1%. Your portfolio is basically the S&P because they have so many stocks. Any individual stock is moving it around, but really overall, it's muted. It's really just moving around the S&P. So I'm saving myself that management fee.
All right.
What is the Billy? What is that thing, Billy B? What is
BILI is a Chinese play on streaming video. So how I love the esports stuff, and I've been talking about esports on the show and finding different ways to play esports. Well, there's a lot of video game streaming that is going on this site. People actually are streaming their game. People are watching this. So that's what BILI is. It's for streaming video and in China. And so I like that. I like the idea of it. Now, fundamentally, these things are so hard to evaluate because first, it's a newer issue. Secondly is, can you believe the numbers that pop out of any of these companies?
Hey, Dennis, can I interrupt you for a second? We're running a few minutes behind on our first guest, so I'm going to take a quick break.
Oh, sorry,
No, it's all right. I wanted to let you guys go, but it's clear Dennis is not going to stop.
Dennis won't even notice.
I know.
Go to the break.
I know. That's why I had to interrupt him. That's why I had to. I know. That's why I had to interrupt him.
Let's go get the guest. Right, so that's BILI.
We'll come back to that. Don't worry. But our first guest is Greg Firman. He's the owner of E-Trade FX. He's a Forex and futures guy. We'll be right back with Greg. All right, welcome back, everyone. We have Greg Firman on the line with us again. He's the owner of E-Trade FX, primarily focused on the futures and Forex space. Greg, how is it going in Toronto this morning?
It's not too bad at all. Thanks for the call and having me on this morning, guys.
So I guess it's a pretty good day to have someone who's focused on the futures markets on the show, since we started the show off talking about oil and potential supply increases. I don't know if you believe the headlines there, Saudi Arabia and Russia. So what are you looking at in oil this morning?
Oil this morning, right now, I'm seeing pretty much a break of one of the key Vantage Point levels. That's coming in around 70.48. So Vantage Point basically has been forecasting oil moving lower since the beginning of the week. I'm not sure I really agreed with that forecast, but sure enough, based around the program looks at the correlation to 31 other markets when it forecasts the target market, and it appears to be pretty accurate. And we've had even a bigger move lower this morning. So a lot of these times what I'm finding is that I tend to get out in front of the market by 3 or 4 days on an early warning sign, but then I'm looking at some critical levels to see if they're going to hold. Now, yesterday with oil, that critical level of 70.48 that I just mentioned, it held right to the number, but then it really took a hit last night. So that has me buying pairs like US Canada. If oil is going lower, that is a direct intermarket correlation to the US Canadian pair. So as oil moves lower, the Canadian dollar simply cannot take that. And it's a very easy buy on that particular pair last night and probably again this morning if oil keeps moving lower.
That you bring up an interesting point there that I want to elaborate on a little bit. So you said you saw several days ago that one of your signals was signaling that downside was imminent for oil, and you didn't necessarily agree with that. So when you get a signal, how do you go about reacting to that if you agree or if you don't agree with what you think with what you think will happen?
That's a great question. One of the reasons why I've moved towards the Vantage Point software is to become more mechanical in my trading, take my own personal opinions out of this. I have a very strong opinion that oil is going to go higher because of summer driving season and because of seasonalities that I've seen in the past. So if I get a signal that's the opposite of that from Vantage Point, then I'm looking at that and I'm taking it very seriously. The tough part is to move your opinions out of trading and get this thing more mechanical. So basically the sell signal on oil formed on Vantage Point on the 22nd. And I looked at it and I'm like, well, I'm not sure about this. But then their neural index, again, their neural index takes the correlation to 31 other markets when it's forecasting oil. So I'm not going to fight it, but I also don't want to fight the market. So I'm looking for both. So as the market basically started to sell oil too, Vantage Point already had me looking at shorting this thing anyway, and sure enough, down it goes. But again, we still have to worry about, the summer driving season, but at least for now, probably into June, mid-June, oil is likely going to continue lower, but it is strong. And again, I think we talked about it in the last podcast, bringing in the yearly opening price on some of these things too really helps. So when I'm looking at that, the yearly opening price on oil, clearly the oil is bullish. The yearly opening at $60 a barrel, but that doesn't mean we can't have a significant correction. And right now, Vantage Point's done a very good job of actually forecasting these intermarket correlation. That's one of the huge advantages of intermarket analysis, advanced intermarket analysis versus standard technical analysis. We're looking at multiple markets at once.
And that kind of builds on something that we were discussing yesterday, and we tried to a theme that is reoccurring on our show is having different time horizons. So in the long term, you're still bullish on oil, but for now, you're playing the downside.
Basically the first thing it did is it took me out of my long trade. So if nothing else, this is, I think, another thing with traders, they have to take profit. So the same signal that put me into the long oil contracts in gold, I actually did a live seminar down in Tampa, Florida. We were doing live trading in oil. This was back in April when oil was down in that lower $60 a barrel. We had a strong buy signal at that particular time, and which sent it higher. But the same thing, and I think this is where not all traders, but some traders get confused, is how to get out of this thing. So I don't necessarily have to short oil, even though I am a little bit here this morning. The main thing is I've taken those longs and banked that profit. We don't want to fall into a mutual fund type of trading where we're simply going into a buy and hold and saying, okay, well, that's it. I'm just going to hold this thing. And then usually what happens is the person or the trader holds it until it actually is no longer profitable. So we don't want to do that. We want to make sure we're taking the profit, good money on those longs, close them out, take half the position size and start shorting it. It's been a great signal to short. But there's a lot of geopolitical stuff going on, like you said, with oil right now. So for now, a known pattern with oil based on, adding some fundamentals into our trading is that essentially, in going into summer driving season, oil is usually quite strong. If it's weaker in mid-September, but usually mid-May to mid-June, oil is pretty strong.
Okay. What other markets do you have your eyes on this morning?
Gold. And if gold can continue to hold above that 1,300 mark, stay above that yearly opening price. We've retaken it this morning. We've come a little bit lower, 1301.58 approximately I have from last night. But there's potentially a very good long trade where it's sitting right now if this can hold. Now, if that does hold, and gold advances back over and holds back up above 1,300, that could trigger and also assist a long trade in oil in the weeks ahead. So these commodities tend to run together. But also the S&P 500, a very good call from Vantage Point on the long side this week. But all of these trades are all tied to a forex pair. Let me be clear about that. So if gold, I think the Americans, you guys have a holiday on Monday, right?
Correct.
So Canada, we just had one on Monday, Victoria Day. So the markets are a little thin, a little illiquid here today. So I wouldn't, take anything to the bank on price today. But a lot of these moves have already happened at the start of the week. Gold started recovering. Now, if gold's recovering, and it can hold above that, again, these key levels that I've discussed, then that's going to trigger dollar weakness potentially right across the board. So, forex trading is buying or selling US dollars, right? So, there's opportunity there. That could see the euro base out and move higher potentially next week. The British pound, it's a tricky one with Brexit, but overall it's been good on the short side. But again, if gold can kind of recover a little bit here and put some pressure on the greenback, that's going to help our forex trading immensely.
Question here from our chat: is there a link between low oil and the value of TREX? Not sure.
To some degree, basically the Canadian markets, any Canadian stock or any oil ETF is going to be affected by that. Absolutely. If we've got oil moving lower, then your oil stocks will move lower, your oil ETFs will move lower. The Canadian stock market certainly does not like that at all. They like oil being up, right? Canada is kind of like Norway. We based our economy around largely around oil.
Talk about Canada, just in the, obviously we've recovered quite a bit there, but I was just looking at a 5-year chart of, the XIU in Canada, which is the Toronto Stock Exchange top 60 components, made up of a lot of oil stocks. And if you look at it over the course of the last 5 years, it's kind of gone nowhere. Do you think there's some catch up maybe here? I know oil is pulling back for the last couple of days, but if we believe, that oil is going higher here over the next few years, do you think there's a play there to maybe play catch up in some of these Canadian stocks?
Yeah, absolutely. And the problem is Canada's too, most Canadians, they're moving over and buying US stocks because the Canadian stock market has just been a dog here for years.
5 years, we've really gone nowhere.
Yeah, nowhere fast. You're absolutely right. So if oil can really break out, potentially up towards that $80 a barrel, that could boost those Canadian stocks. And my American friends here, they should absolutely be taking advantage of some of that. But there's also some very good oil stocks in the US, oil ETFs. Some of them are pretty cheap too, because like you said, they've been taking a beating for 5 years.
Yeah.
The only counter to that is what I would say. Green energy is becoming a big thing, right? They're really, really trying to phase out fossil fuels, and Canada is moving towards wind power, solar power. Canadian Solar, another stock, has done quite well over the last few years. These companies are, they're trying desperately to move, and the Green Party is making a bit of a move. We've got an election here in Ontario next month, so it's going to be interesting to see if that Green Party can actually make any headway.
Greg, any last words before we let you go this morning, and before we wrap up? Any last words for tackling the market today?
Tapping the market today, guys, I would be very cautious with a holiday short week liquidity, and I would be even more cautious on Tuesday of next week. One of the patterns I've seen in the market, is I've seen a lot, basically, Monday is like a reversal day. They're trying to trick you into going a certain direction on Monday, or next week that's going to be Tuesday. Then the real price shows itself the next day. So be a little bit careful trading early in the week. Kind of let the market get some traction before you jump in there, and keep a very close eye on today and next week is, can we hold above 1300, 1302 on gold? If we do, then that's going to represent some good US dollars selling in the days and weeks ahead.
All right, Greg Firman has been on with us. He is the owner of E-Trade FX. Is his firm. Greg, thanks so much for the time as always, and have a good weekend.
Great talking with you guys. Have a great holiday weekend to you too.
All right. Thanks, Greg.
Bye-bye.
Gosh, those Canadians are just so polite, aren't they? So
Except this one.
except one that we know. Okay, 8:30.
This one can be rude. He's an Americanized Canadian, though.
8:30 imbalances are out, but we also still have earnings we should get to. So where do you guys want to go?
Well, first, there's a good just from the chat there. Spinner was just asking us if we had any thoughts on, oil's coming down the last couple of days. Do we have any thoughts on stocks that could actually get a lift from, lower oil prices? And the airlines are what you naturally think about. And actually, it's funny, if you look yesterday's candle, you had a nice lift in a lot of airline stocks yesterday. Alaska Air, ALK, had a huge nice candle yesterday, putting a bottom in right at the 58 where it bottomed back in March and April. That's kind of where we bottomed again, and we just blew out of that, going higher up to $60 yesterday. Also, if you look, I like Southwest Air down here. I mean, $50, a big psychological level. Couldn't quite get there a couple of days ago to 50.20. Now you get a nice candle yesterday with a little bit of weakness in oil. I think you see some continuation here today. I wouldn't be surprised if Value V starts trading over 52 here. So as short-term trades here, I like the airlines for a bounce. What do you think of this, Joel?
Yeah, no, I like the formation there in the love double bottom at the 50-20 area. Could be getting a little boost. It's just, be careful. Sometimes the market factor can be a little bit of drag on it, but
that can allow you to get in. I like sometimes you see the market coming down, and sometimes that can be the catalyst to actually, get you in on the cheap. Like maybe some of these airline stocks open down today because the overall market's opening down, and maybe that gets you in on the cheap.
Yeah, I agree. And see, we can talk more airline stocks here in just a few minutes when we have Frank Holmes coming on. That's his forte. SPOOs continue to deteriorate here, just inching down, making new lows of the session. We are on the pre-market low right now at 27.20. I just don't have a lot in there, folks. Anything under 27.10 was scooped up, over, the last 3 or 4 sessions. So that's your major support. I want to see, Dennis, what's going on with imbalances?
They're very small. Obviously, we're going to see the oil stocks weak, so they're starting to form a few sell imbalances there. I know BP's got 20,000 to sell. That's already down 1.5%. But the oil stocks are going down. GE, small sell imbalance. GE actually is showing some life yesterday, and we got some egg on our face a little bit from saying I thought it could go under 14, but then David Faber comes out. Well, his Faber came out and said he's told me the dividend is safe. So again, you got to immediately, when you hear a statement like that, and that's why you have to watch the news. You have to watch your Benzinga Pro so closely there, because I was thinking about shorting G off the open. I pulled all my short, or this was like a 9.14. I pulled all my short orders immediately, because that's what they wanted to hear. And then the CEO came out and said to Faber that he's not cutting the dividend. So it got hit the day before because there was a potential dividend cut. Faber came out, great reporting by Faber to find that information out, and said, look, they're not going to cut it. So not surprisingly, it bounced right back. So you've got to be able to change your opinion on a dime if the fundamentals change, because technicals take a backseat to fundamental information. If there was no information yesterday, no new information, I think GE would have kept to continue to slide. But you knew it was probably going to rebound once Faber came out with that statement, and it did. And so it's a different game now. Even GE is trading up here in the pre-market right now as they kind of want to come in and buy it too. So that's what they wanted to hear. Faber got that story, and I think he said around 9:05 or 9:10, just after our show started. I wish we would have still been on the air and we could have said that. But I definitely thought it was going under 14 before that information came out, and I quickly changed so I didn't lose any money on it. I actually went long some stock and made some money on it, which you have to do. You have to be able to change your opinion on a dime if new fundamental information comes out, and that is market moving information.
1472 yesterday's high, 1460 close. So I see what happens if it can actually take out yesterday's high, and maybe now you're going to have the paper rebuilding at 15 after you had to break down to 1411 as your short-term traders, come in and scalp, 50, 100, couple 100,000 shares on this liquid and lower price moving stock. Before we go to our guest, I want to cover the stock for BZ Tokyo. He was been very patient, and all I can say is just keep an eye on 28 here.
What stock?
Canopy Growth.
What's the symbol on that? That's the new one.
It's a new pop one.
Well, that just got listed NYSE.
Yeah.
What is the symbol though?
Charlie George Charlie.
Okay.
Nice move yesterday, but you had a reversal, which is not good, trading up 25 cents at 28.45. To me, it's all about 28 even. That was your 4-day low, and then 28.11 was yesterday's low, and that was also an old high. So it holds 28. I like it. Under 28, look out below. Your next daily low comes in at 25.63. On the upside, if you do get a rally, I don't know. I think size may be building into half and whole numbers now, 29.5 and 30. Old time closing high 30.81.
All right. Don't get married to any of those pop positions though, because I think when the dust settles here 2 years from now, I think the stock's a lot lower. But it's gonna have hype. They're hot right now. They're still hot right now. They're going to have, it's going to get legalization here in Canada coming, later this year. That's going to maybe pop it up more. But from a valuation perspective, a lot of these don't make any sense.
All right, we're going to take a quick break and grab our final guest of the week, Frank Holmes from U.S. Global Investors. We'll be right back. All right, welcome back, everyone. We were able to grab Frank Holmes, CEO and CIO of U.S. Global Investors. Frank, how's it going this morning?
Excellent, my friend. Excellent.
All right, we were just talking with our last guest about oil, and then we were asked in our chat for some stocks that could be potentially move higher on lower oil. You're a great guest to have on because you follow the oil markets, and of course, you have the Jets ETF, the Airline ETF. So, give us your thoughts on this entire market this morning.
Well, I think the big part of some of the airlines industry is that 2 million people fly every day in America. And the correlation with the U.S. and along with the world is rising GDP per capita. And looking at down the road, the next 6 months is what PMI, Purchasing Manufacturers Index. So when those two are positive trending, it's very good for the airlines industry, both globally and domestically. Now, what happens is that every time oil rises, people start shorting, the hedge funds start shorting the airlines against the price of oil, and there's all this sort of noise trading taking place. But more important underlying that is the economic engine. Then people have the income and levels to travel. And we're going to go into summer tourism, and that's always a big, big surge. So right now, the price of tickets are soft. It's like normal. And then all of a sudden, going after the Memorial Weekend, we start seeing car travels picking up. More people are traveling in their cars, and we start seeing a pickup for summer holiday. So I remain very positive and constructive towards the industry.
That's an interesting point. Trading noise versus underlying economic factors. So the underlying economics tell you that this is a good time to be buying the airlines, regardless of oil, is what you're saying.
Yes, and we don't know when Buffett's going to wake up and, like you said a couple of months ago, that he's thinking of buying a whole airlines. He's invested $10 billion in that sector for several reasons, and one of them is that sector of transportation has the highest returns on invested capital. That is probably the overarching number one factor that he looks at. And it also has a moat around it. It's very hard to build a new airport. It's very hard to get new slips at airports. And there is a shortage of pilots. So they can't really Uberize each other like they did the taxi cab business because it's just bredder. So there's a moat in the industry.
Hey, Frank, Dennis Dick here. I just wanted to maybe jump into the airlines a little bit further there. Obviously, a lot of the stocks have been beat up here as of late, so maybe due for a rebound if oil starts to come down. Is there any specific airline that you like the best? What's your thoughts here on the individual airlines? Like which one do you like the best?
Well, if oil comes down, as you're a trader, then you want those companies that are unhedged, and American Airlines is unhedged. So I believe it's also Allegiant. They do not do any form of hedging, whereas Southwest Airlines has a hedging model, a very sophisticated model, and most of the other airlines will hedge out 50% of their production each month, whereas Delta has their own refinery. So they basically make money going up and down. So I think that as a trade, it's that. Otherwise, you just buy jets. Jets is very inversely correlated with that price of oil short term.
Wait, can you just kind of recap with that for a minute? So which airlines have active hedges against oil and which don't?
American Airlines is unhedged. So historically, when the price of oil rises, American Airlines stock takes it on the chin. When the price of oil falls, American Airlines surges because it's unhedged and their profit margins, 50% of their costs is energy. And so that's one of the best airlines to trade around the price of oil. On the other hand, the CEO has taken stock as a salary for the past 3 years, and that's been a big win because they're incentivized to increase the dividends because he gets paid and lives off his dividend income. So he's basically taken stock as compensation.
All right, Frank, I want to shift gears a little bit, no pun intended, but I believe you were at the Consensus Conference last week, right? The cryptocurrency conference in New York?
I was.
You were, okay.
Amazing.
I guess it's been a while since I don't think we had you on since before the crazy crypto craziness or from last year, but I'm assuming that you're bullish on the space in general.
Yeah, so it's they had 8,500 people show up, paying $2,000 a person. Booths were everywhere, and the biggest booths. I mean, I never saw so many promoters and from big corporations to small along an aisleway, going down a back aisleway where booths people, and they were all jam packed. 3,000 people early in the morning in the main auditorium. And I was just really impressed with the sheer magnitude and genders. Most of these investment conferences or things I go to are 10% women. This had to be 40%. It's a new world, and the biggest booths were Microsoft and IBM. So I thought that was another interesting statement. They had Fred Smith from FedEx speaking how blockchain is a revolution. Bitcoin is what email opened up the internet, the use of it, made it that you could transfer information, and Bitcoin's shown that you can transfer value. I think that a lot of the mainstream America is still wrestling with the concept of trust, and money is all about trust. Gold is about trust, has the longest history of survivorship for trust. And along comes the millennials, and digital money is a form of trust that is slowly getting, it's a groundswell. And when you take a look at some of these exchanges, still there's investigations going in and looking at and examining them. But outside of that, it's growing. And the millennials, who outnumber myself as baby boomers, they're into the digital world. They're into trading these currencies. You can open an account at Coinbase, which had a valuation a year ago of $1 billion, is now valued at $8 billion. They opened more accounts in 3 years than Schwab in 30 years. It takes you 5 to 10 minutes to open an account at Coinbase. It takes you 3 days to 5 days to open a brokerage account. So either the normal old school financial sector makes it easier with technology, open accounts to be able to trade and speculate, then the millennials are going to trade these coins.
Joel, did you have a question?
Yeah, we're on the line with Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. Frank, gold here. Looking at it, trading here back over 1,300, 1,305. I mean, really over the last several years, really, it's been kind of dead money. I mean, you have threats of political tensions don't move it. It doesn't seem like inflation numbers move it. It just seems to be like a trading range and it's going to be in forever. What could bust this over 1,400 or get it into triple digits?
Well, it's a great question, but here's the interesting part. Long-term bullion since this century has doubled the performance of the S&P 500. Doubled. And that's a reason why I've advocated a 10% weighting and rebalancing each year. Last year, it was terrible. It was up 13%. That's not bad. I'll take that. The long-term return on invested capital is 6% for the stock market. So I'll take gold into being up 13%. And year to date, gold has outperformed the S&P 500. So I don't know if it's all that bad. And yes, it's in a trading range. That's where we are now. But a stronger dollar, weaker dollar changes the short-term sentiment of the price of gold for that fear trade. But what we really have to look at flying at 50,000 feet is that the real long-term growth for gold is coming from China and India, affectionately known as Chindia. 40% of the world's population, GDP growth rates double the U.S., the rising GDP per capita. The largest middle class in the world is now China, with 110 million middle class people. You can see it in trade. I was in the New York Stock Exchange last week, and it's just shocking when you see how many people that are in front doing selfies, and it's Chinese tourists. So there's a new boom taking place, and they give gold. They buy gold for love. It's called the Great Love Trade. And I don't think that that's going to go away. And the other part is supply from gold mines is peaked. So you're not seeing new supply come on. There's no fracking technology that's been able to enter this business. Whereas the world continues to have babies, money supply grows faster than the supply of gold coming out. And gold long term is always going to be the element of trust globally as a form of money. So I don't think that's over. But I want to share with you, I didn't finish my consensus story, is that I'm also the chairman of Hive Blockchain Technology, which was the first public company to be mining coins. So I don't have any of those AML concerns, anti-money laundering concerns. We're mining cryptocurrencies in Iceland, Sweden, and you can enjoy high returns on capital. We have institutional sponsorship. Fidelity's come in and bought 10% of Hive Blockchain. So that's another reason why I was at Consensus, because I couldn't launch an ETF product, and I understand why. So where it was buying the coins, I make them. And when you validate a transaction in the crypto world, you get paid new coins. So if I validate a Bitcoin transaction with my machines, they pay me a new Bitcoin. And so I create what they call the Genesis, the first coin, and that's a clean version coin. And in that what they call the open ledger world, it's easy to track, so it's clean money.
Frank, I just want to ask you a little bit about the mine, because we don't usually have any people who mine the coins on the show. So I just want to ask you about what happened. So first of all, like, how much does it cost in energy to mine a Bitcoin? And then secondly, what would happen if the price of Bitcoin fell below the cost to mine? Would everybody stop mining?
It's a great question. Yes, there's a whole marginal group of people around the world. And when it comes to Bitcoin, there's 12,000 nodes. 12,000 all around the world independently mining, competing to mine the coin. What people don't realize is it's a drop puck or jump ball every time. Every 10 minutes, people go out and run to see if they can get the opportunity to validate the cryptology. And to do that, you need cheap electricity and you need powerful ASICs computer systems. Now, the consumption of energy has been really grossly overstated. I just hear these numbers, and it seems like the green environmentalists have come up with these projections, which is in la la land. A lot of the electricity I know that we use is green energy, is geothermal from Iceland. That's just, and it costs us only pennies to mine. So we're in a very competitive advantage. It's cool weather, so it keeps these machines cool. And interesting enough, these data centers, which we're expanding in Sweden, Facebook and Google are near us because they need these data centers. And we see that these GPU cards to mine Ethereum, they're necessary for gaming and also artificial intelligence. And as we have a greater boom in artificial intelligence needs and machine learning, and for that technology boom, they're going to be looking and rendering, they're going to need our type of data centers, which have these GPU cards. But you have to be in cheap electrical areas. So they're not going to be in Michigan. They're not going to be in New York. They're going to be in northern Quebec. But even better terms are where there's stranded electricity. And you see that in a lot of the Nordic countries. So we have hydro plants that have very inexpensive surplus electricity in northern Sweden above the Arctic Circle.
All right, we've been on with Frank Holmes of U.S. Global Investors, and as we just learned, Hive Blockchain. Frank, thanks so much for the time today. Always great chatting with you, and have a nice Memorial Day weekend.
All right, thank you, gentlemen.
All right, 8:50 now. Got 10 minutes or so left in the show. Guys, where do you want to go? Retail or chat?
There's all kinds of places we could go here. Well, is there something in the chat? Is there somebody that wants to?
There's always stuff in the chat. I don't know. I can't be watching.
We get someone asking about CRSP here, and that is a CRISPR Therapeutics. Had a great bump yesterday. The only thing I just don't like is that bump was sold. And he went up to 73.90, which was an all-time high by a large margin. You came back and settled at 69.65, trading up here a little bit in the pre-market. I like this as long as it stays green, being up $1.30. I think you'll have to, if you want to peel out today, I don't think you're going to see that 73.90 level. But the area of control is that double close from Thursday or Wednesday and Thursday. After that, yesterday's low 68.11, and there's a lot of air under that.
Then from the chat, we got DC wanting to know about BioMarin, BMRN. Saying they got an FDA approval. Spencer, I don't know the details on, what got approved or what drug it is, and I don't follow the company closely enough from a fundamental basis to comment on that, but we can comment on anything technically here. It is trading up in the pre-market, so obviously this is on the backs of that FDA approval. I can tell you it is off the highs here now, though. Looks like it kissed up to $92 just after 8 o'clock, and now we're offered at 91 and trading at 90. So that's somewhat concerning, and I'll tell you, this chart is just thick when you look out at the dailies. All kinds of highs in the 92, 93, 95 area. The definition of overhead supply here. So I'm not sure I'm chasing here this morning, even though it looks like there's some positive news out there.
And another thing that's on the negative side, you are $2.50 off that pre-market high in 92.48 that it reached on very, very light volume. So the number I will keep an eye on is 90.85, and that is your 4-day high. So keep an eye on that. That's 85 cents away. If in fact you could take that out, maybe you could work your way into 91 and 92 handle. But leaking so far, a couple bucks off the high off that good news.
I want to go to I want to go to FCAU. I can never understand why sometimes recall headlines move stocks and other times they don't. So this morning,
welcome to the welcome to the markets where something you think is going to happen, it doesn't do it, or it does the exact opposite.
Right. So FCAU again hit this morning. They were calling 4.8 million vehicles. It's according to CNBC, and stock is going to hit on that news. And this is one of those inconsistent things where it sometimes it happens, sometimes the stock moves, sometimes it doesn't. It's hard to say, But
I just want to say, out of all the automotives and all the love that is given to Tesla, look at what Fiat Chrysler has done here in the last year and a half. This has been the best one by far. October, we were $6 in October of 2016. Here we are a year and a half later talking about $22 stocks up 300% in that time period, where Tesla in the same time period is actually up about 30%. And if you look, GM and Ford over that time period have basically gone nowhere. So unbelievable. At least the stock appreciation in Fiat Chrysler. Maybe it was really overdone, too cheap. Down was $6, but you can't argue with the chart. I mean, out of all the automotives and all the love that Tesla gives, FCAU has outperformed everyone.
Yeah, and you're looking at an area, you hit a pre-market low of 21.30. You're 43 cents away from that. I do see some daily lows at 21.45 and also lower in the 21 handle at 21.04. So good to go. I believe it's staying above 21. I know that's 73 cents away. Just from your April low of 1950 up to the April high of 24.41, 5-point move, 2.5 on that. That takes you to the $22 area. So needs to get back above 22 to take a shot at those higher levels. If not, I mean, just looking at the daily chart here, I just don't like when you have a stock that leaves a lot of air underneath in it, because once it gets air on the way up equals air on the way down.
It's better saying race has done really well there too. And if you look the same time period from that 2016, it's up from $50 up to like 130. So that would be 170 or 180% that it's up as well. So another great performer there that not too many people talk about too is RACE, great ticker symbol as well.
Yeah, now this one has a scary looking technical formation, 2 lows in a row at 130.11, 130.34. We are not under 130 yet, folks, but if in fact we do, there is nothing to lean on into the downside here until you get in the lower 120 handle, 123.71. So keeping a real close eye on RACE holding 130 today.
Let's go
Jump
over.
over.
Go. I was going to go to ratings. We got 4 minutes, and there was one big one from this morning. Stifel is upgrading PayPal from hold to buy.
I don't know what to say. I'm actually long this for a trade here right now. I feel like this could get a kickstarter. The market's not helping that though. So market is obviously really rolled over here since I was buying this morning on the upgrade. But I think, if the market does show some life, this PayPal, I feel like wants to go. I was talking with Jerremy Newsome, actually just chatting with him last night, and we were talking about stocks, and he was saying he loves Square and PayPal. Square has run so far, but I feel like PayPal has consolidated for a long period of time now. I think PayPal is going to be a $100 stock. So valuation, I know it's trading like 27 or 28 times, a little bit lofty, but they've still got some pretty good growth there too. And, yes, Square, maybe can move there too, but valuation's a lot more scary on a Square than it is on a PayPal. I like it. I think it could go, on pullbacks here. And I don't know if you're going to get a pullback today with the upgrade, but I like PayPal on pullbacks. I think PayPal is eventually a $100 stock.
We are trading up 91 cents at 82.46. And I'll just 83 is my number here. Your pre-market high comes in at 82.95. And then the high that you had, I'm not sure if it was off back in May, on May 19th, you had a high at 83.23. So if in fact you can challenge and hold those numbers, take a look at getting up to 84, but opening into a little bit of resistance in kind of a red market. I'm not a buyer here off the open.
And the other ratings, there's a couple here this morning there. I want to go to the little one here. BTGN is getting an outperform rating at Oppenheimer, and they put a $6 price target on this stock. Stock closed at 97 cents, and because of this $6 price target, it's trading at $1.68. Is there other news there?
Wait, BT.
Is this real? Is there other news?
Wait, BTGN? That's not a symbol.
No, V. V as in Victor. Victor, Timothy, golf.
That's not
Nancy.
It's not even on my trade station.
VTGN, V, Victor.
I got it.
Trade 2 million shares.
All right.
Well, yeah, Victor, Tom, George, Nancy.
Is that, check the pro. Is there other news, or is this really trading up 75% because some analyst came out with a $6 price target? Because sell.
This was, we were talking about this yesterday at the news desk. Right. Yeah, that's right. that is the news. The $6 price target.
This is a sell. In my opinion here, hit every bid. Honestly, that's my opinion. We don't give investment advice. We don't give recommendations on the show. Giving my opinion, this is a ridiculous move here. This thing is getting back 3 or 4 months of losses here, literally because some analysts came out positive and with a $6 price target.
Yep.
It's not like it's company news here. This, I think it's faded all day. I think $1.69 is a gift, in my opinion. I think this thing's under $1.30 or $1.40 within a couple days.
Yeah, it was a $6 price target on like a 90 cent
people
stock.
here right now, but this is not going $6 today. So, in my opinion here, I think it's a short.
Okay, set it up for me, Dennis. We haven't done
a bet?
Want to do a lunch bet?
Let's do a lunch bet. I'll do it.
What do you want? What do you want? Give me your parameters, because I always put stuff
want a
out
dollar. It's got so much.
now he's
How high?
backing
Stop. Okay,
No,
how
yeah,
high has
yeah.
it been today? Tell me how high it's been.
182.
The exact high is 182.
Yeah, this doesn't see $2 at all. I think this thing sees, it's $1.65 here right now. I feel a little bit off the highs. I think it sees $1.35 before it sees $2. There. That's actually, you know what? I actually, with these, you got to watch these little dollar stocks because I'm screwing myself, because on a percentage basis, his percentage rise, well, I guess it's still $1.65.
Where do you think it's going to close?
I think it's closed under $1.50. Maybe I'm wrong. Maybe this thing is going to blast off.
I'll take that. I think
it's not seem ridiculous. It's up 72% because some analyst came out with some crazy price target.
Yeah, but here's the thing about it. And the only reason I'll take the other side.
Squeezing. What's that short interest? Let's go look at the short.
Oh no,
is it bad?
Is it high?
Hard
to? It's probably hard to.
Is this a short squeeze?
It's probably hard to borrow, Dennis. Is someone?
Let's look.
Spicy.
BTGN. That's only 8%. A little bit.
All right. Here's the reason I'll take the other side of it. Someone got the memo on Wednesday when it traded 500,000 versus 100,000 on Tuesday, and I just think it's just getting going. I think that like the funds and spots
you're buying this thing up 73%.
I'm not buying it, Dennis. I'm saying what the algorithms are going to do, and it's a cheap stock, and it's a Friday before a 3-day weekend, man. Why not just pile in this puppy and run it? Could run to $4 and then close at $1.50.
Okay, so this is one of those low flow plays too, isn't it? So what's the volume from the last few days, other days?
Well, the memo went out on Thursday because on Wednesday went out on Wednesday because it traded 100,000 on Tuesday, closed at 99 cents, and then somehow
What did it trade last week? What were the numbers last week?
124, 70,000, 70,000, 80,000. And then it traded 500,000 on Wednesday and over $1 million on Thursday.
You're talking me out of the short. I'm scared. Okay, dust settles here. A month from now, this thing's back at $1. But does it squeeze you more before that? That's a question, I guess.
9 million shares of the float.
So, how many?
9 million share float.
It's already traded 2 today, so it's going to be one of those.
It's going to be one of those days where 18.
This thing going to trade like 20 million today.
Yeah.
All right, I'm too scared to short it, but I'm not buying it. You shouldn't have did that. You can make money on it. Anyways, I'm too scared to short it, so I think a month from now this thing's back to $1. So don't get married to it, but it could squeeze further in the meantime. So too crazy for me to trade. You're right, Joel. I shouldn't be shorting the stocks that are $1.69 because you can get run for that way.
You always say that too.
I'll tell you, I strike the rip from the record, but I think 1 month from now, I think this thing's back to $1.
You always say that too, Dennis. You always said
I'm usually right.
There's no telling. There's no telling how high it'll go. You don't know if it'll go to 6.
But you never know how high they're going to. You never know how stupid the market's going to be. But when the dust settles, these things come back down to earth. So it's a matter of how much heat you can take, or if you can take the heat at all, or if you get bought in.
Yeah.
I do say that.
I'm just looking at it because just from like a low float, high volume, let's have fun on Friday, with the cheap stock kind of trading scenario. But we'll keep an eye on this one. Dennis, we'll let you slide here. We already went almost 4 minutes over. If there's any other issues on the radar here, I can take a look at them. If not,
Colgate got upgraded Argus. That was one other one just from ratings land there. And then I'll just go back looking at imbalances really quick before I let you go. You're seeing a couple buy imbalances on banks. I'm fading those. Any bank that opens up here today, I think it's hit here. So because TLT is way up here now, that's going to be weak for the bank. So I would love some of these banks to actually open in the green just so I could sell them. So that's keep an eye on those. Any banks open strong, I'm getting the hell out of them.
Okay, $63 in Colgate Palmolive. They're your last 3 highs, 292, 301, and 312. We are 50 cents away from that, but above 63, there's some room on the upside. A couple days of quiet ranges in it. S&P futures continue to leak here at 17 and a quarter, down over 10 handles. Crude down over $2 here at 68.68. So falling, giving back a lot of those gains here in the crude oil market. And let's see here. What else are we missing? Rocket 7 here mentioned Micron. I don't know how I did on my prediction yesterday. It did easily clear that 60.50 level. It's trading in the red here, well above Thursday's low at 59.56. But keep an eye on the closing price, 61.49. That's been the recent high of the move. So that I'll bump that down from the 61.99 high. It should be good support if you fall under $60.
One thing I've
I'm
noticed.
out. I gotta go trade.
I know.
All right, see you, Dennis.
I said bye a
I
while
never
ago.
say goodbye. I don't want to say goodbye. It's the weekend.
Okay,
so
we
you
will-
say goodbye to me.
we will
I'm
see you-
Hey, I'm the nice guy. I
We-
don't leave till somebody says goodbye.
We will
I'm
see
gonna
you on
talk to you at
Tuesday.
10
I'll just hang up on you.
All right,
I'm
Dennis.
going to talk to you at 10 o'clock. Go short.
All
Go
right, everybody.
short.
Have a great trading day. Have a great weekend. We will talk to you guys on Monday.
Tuesday.
Joel's staying with us. So stay on the
Tuesday.
show.
Don't
No,
go.
Dennis is going to do a show on Monday by himself.
Okay, have
Oh,
fun.
yeah.
the-
That's
and
right.
for all the
We're
Canadians.
talking- Well, that's it. I don't have any holidays. All right. I got to go.
All right.
Bye.
Wait, Joel, one thing I want to add on Micron. This thing trades in the pre-market. I mean, seriously, this volume, 1.5 million shares have traded this morning already that I'm seeing.
Is there any news on it?
No, it's been like that for like 2 weeks now. There is no news.
Let me look at it.
Here,
Well, that's
you know what?
good.
There's one headline in Benzinga Pro. Nothing really. I wouldn't think that would be out. That would cause 1.5 million shares to trade. It's super thick in the pre-market, and that's been the case for now for weeks.
That's good. That's good. I mean, then that gives more significance, I think, to the daily levels. If like right now, like someone's definitely trying to bring some stock in here at 60.50. Came hard off 62, so 60.50. I mean, if you're just looking at a 15-minute chart here, holds that area, boom, SPOOs get a little rally, you go back and rally up, takes out 60.50. You're talking about a short-term trade here. Maybe bring it in at $60. I don't know if you can get in yesterday's low at 59.56, but no, I never noticed how much volume that traded here in the pre-market. Let's see, HUYA. I know we're getting into streaming video games and things like that. This is one that Dennis is in with a couple other people in the chat. And we are trading above yesterday's high at 23.38. So there's really only one number to keep an eye on here, and that's the all-time high at 24.36. If you're looking at for a potential target, coming back on the downside after having a huge $3 rally on Thursday. Wouldn't want to see it go red under 23.09. Give yourself a little room, maybe $23, but poised to make an all-time high here for Huya. Let's see what other issues. Is there any news on Herbalife? HLF.
Ooh, I haven't looked at this one in a while. They announced the preliminary results of a self-tender offer. They reporting 49.7 million shares were tendered and not withdrawn at or below 52.50.
All right. This is weird because they did a Dutch auction not too long ago.
That was like a year ago.
And and they got pounded off it and then ended up rallying like what. So I don't know. But what was the number you gave Dennis? 52 Spencer?
52.
That's your resistance. That's certainly your resistance. If you're looking for support here, they might have to bring that price down. I think that's what the apprehension is in the market. That after I think they had a 2-for-1 stock split, and now they're trying to jam the stock down people's throats. I think right now, the feeling on the street is no one's going to touch that tender offer here at 52.50. So I keep an eye on that as resistance. And if I'm looking for support, your pre-market low is 49.02. You're 70 cents above that. Your daily lows do not come in until you got a couple lows at 49. I keep an eye on that because you had an 897 low, 919 low, and 922 low, and an 891 low. So 49 even. We'll see if it can hold that in today's session. Jazz, I'm not going to forget about you, Jazz. Amazon. Have not looked at that chart. Hey, did you hear what happened?
Yep. I know what you're going to say.
Okay, go ahead. Tell everybody.
With the Alexa that recorded someone's phone conversation and sent it to one of their contacts.
Yes.
I knew you were going to say that. I don't know how. But yeah, it recorded a private conversation and sent it to a random person. And so.
Or no, I think it sent it to the person. Like if I was talking smack about you to Dennis and Alexa picks it up and then Alexa sent it to you. That's what I heard. But whatever. We'll see. Amazon. I like the consolidation station here in Amazon after making that new all-time high. I'll just give you a level on the downside. 1580. Let's call it 1585. Going back to May 6th. You've had several lows in that area, and then after that, you get into a gap area and resistance building at the upper end of the trading range, which is 1650. So, keep an eye on that because Amazon's not going to stay here. It's not going to be staying between 1585 or above 1615. So, looking for a move here, maybe some strangles or straddle or something here, but. It's gonna be moving out of here. I just wish I could tell you which way 100% for sure. Can't ignore Larry Glickman. He has been pounding the table on Roku, and this stock has had a nice recovery, trading up another 22 cents in the pre-market at 36.22. Went off the board yesterday at 35.99. 36.10 was your high from yesterday. You also had a high in the upper 36 handle at 36.30, or 36.60. So like just to hold this, test that 36.60, and then clear skies ahead up to 38.84, which was the high since you made that April low. We got Jazz stock here. Stock Hunter, he wants to know about Verizon. This stock on the rebound here. Hit 51.69. Let's see if we got a 50% retracement yet. To 46.08. What did I say the high was here? So let's call it 52 down to 46. 8-point move. $50. Now that's more than a 50% retracement. Spencer, help me with my math here. 50. Let's call it 51.50 down to 46.50. That's a 5-point move. 2.5, that takes you to the $49 area. Your last three highs are surrounding 49. So up and above 49 here, I think you got to move on another leg higher. If not, you could just be a rebound off that big decline. And let's see what else here. Grant Wilkinson is asking about TJX. That's a retailer that seems to always be making new all-time highs, as it did yesterday. 88.74. That's where it went off the board. That was the all-time closing high. Let's see if we can challenge yesterday's high at 89.48. Under yesterday's low, there's 60 cents worth of downside. Yesterday's low, 87.44. Your two-day low, 86.82. Matt and Beyond is looking at JP Morgan, and if you were listening to Dennis here, he is he's looking to gang up on some of these bank stocks off the open, trading down in the pre-market here, 110.78. Not quite at yesterday's low. Yesterday's low is 110.11. So if you don't get filed through to that 110.11 area, then look for a little bounce here perhaps to test the close at 111.23. So let's see. Have I covered everything? I'm looking at the YouTube chat here, and I don't see anything.
I think you got it all.
I got them all? Okay, just
so.
Quick recap. I'm sorry?
I think so, yeah.
Okay, quick recap of the S&Ps. We are now about 20 handles off that pre-market high of 37.75, and another 5 or 6 points on the downside takes you down to your average range, and that puts you in the range of yesterday's low as well. So if you're looking to BFTD the open here, you want to see that 16.25 low hold here, and just buy or step in at 16.5 at 17. Best case scenario, obviously, come back and test mid-range on the session. Mid-range comes in the SPOOs at the 27.27 area, and that also responds for the close. So if you get another 9 points on a rally at the close, I think that could be a good target on the upside. All right, Spencer, 9:14. You want to wrap things up and preview the show you're doing on Monday with Dennis while I'm taking the day off?
Yeah, no. I will be also taking the day off on Monday. Dennis will be here by himself if he wants, I suppose. Though, mark that as unlikely. But that's going to be it for us today, folks. Hope you guys enjoyed today's show, all of our shows this week. Thanks to our guests for joining us, Frank Holmes and Greg Firman. Thanks to all of you who were in our chats, premarket.benzinga.com, youtube.com/BenzingaTV. Catch the podcast of PreMarket Prep on iTunes, SoundCloud, Stitcher, and TuneIn. Just search for PreMarket Prep on any of those platforms. Hope you all have a nice, long, relaxing weekend. We'll be back with you on Tuesday, and that's it for us. So have a good one.